Hi, everybody. Thank you so much for joining. Happy to be here. As Brad mentioned, I am an EVP at Zeldis Research, and I kind of head up our financial services sector. But just in general, just a little bit of background for those of you who don't know Zeldis. We're a full service boutique market research firm that's focused in the financial services and insurance space. So that's really all we do. And as part of that, most of the work we do is for our clients, and it's proprietary to them. But we do usually 2 or 3 studies a year that we sponsor ourselves, really to share out with the industry at large, and to kind of add to the research that's out there and that's publicly accessible. And that's part of what we did here, or what we're doing here, I should say, because this is just part 1 of a broader initiative. So what are we doing, and what are we doing here? What is this about? We decided, we've been doing financial services work, I have, for more than 20 years. And, there's been times where we focus at different segments of the population. Boomers and retirees have been and continue to be a focus in the industry. Millennials, over the last 10 years, kind of became a big focus, or 15 years. And now folks are starting to turn to Gen Z. They're coming into the space, and people are looking at them, and some of our clients and the people we work with are focusing a little bit more on them. And so we thought we would dip our toe. We would kind of, do some research that we could share out. Some of our clients are really focused on sort of technology, FinTech, financial technology. And so we thought we'd also kind of put the focus on that. So, a lot of folks are talking about, in the broad media, Generation Z is potentially a seismic shift in the adaptation and usage of FinTech. So FinTech's been around for a very long time, right? At the very basis, credit cards are FinTech, and obviously more recent than that, websites and other technology tools have been a part of financial services. But I think because of who Gen Z, who they are, and growing up as digital natives, even more so than the millennials, there's maybe a shift in how they're doing things and what their expectations are and how they're using technology. And that's why we're calling it FinTech 2.0, kind of what's the next wave of FinTech going to look like, potentially driven by this market. Just as an example, one study out there from 2021 found that, in 2020, about 58% were using FinTech or financial technology, and that was 88%, the same question in 2021. Now, some of that I think is driven by the pandemic, right? Everybody was in their homes and they had to find different ways of doing things. They, weren't driving up to the bank and going inside. But I do think Gen Z are also part of this drive, and we'll see some of that as I go through here. I should also say, please feel free. You don't have to wait till the end. If I'm on a slide and you have a question, put a question in the chat. I'm more than happy to address it at that point of time. You don't have to wait. So we wanted to explore the impact of Gen Z on financial services industry in general, and more specifically on FinTech. Some of the things we are looking to answer: how are they specifically disrupting the financial services or FinTech space? How are they driving change in terms of what they want and how they use financial services? How do they have different or similar experiences and expectations, usage, challenges in terms of how they use financial products and financial technology? And what, we have a couple things that we're thinking of focusing on that we did a little bit in the focus groups, and we're thinking of focusing on the quantitative. So a little bit on crypto. We have some crypto clients. We've been doing a lot of crypto. We did a large scale crypto segmentation earlier this year, which was fascinating for one of our clients. So that's been something of interest. Peer-to-peer lending apps, which is something else that's come up a lot recently. Payment apps, person-to-person, investing apps. So there were a couple places that we want to do a little bit of a deep dive. So the plan, the overall research plan, is a 2-phase, right? So this discussion, this webinar, is about the first phase, which were just dipping our toe with a couple of focus groups with Gen Z. We just want to we wanted to get the lay of the land. We wanted to hear a little bit about their issues. We wanted to do a little bit of qualitative and hear what they had to say. The idea is that we are going to follow this up with a large-scale quantitative survey of Gen Z consumers. The scope and the objectives, we have some in mind, but some of that is TBD based on crowdsourcing. So through webinars like this one that we're doing with talking to some of our clients, we're looking to hear what is it that folks want to hear from Gen Z? What do they want to know when it comes to how Gen Z interacts in the financial services space with financial technology, et cetera. So we want to produce something that's going to be the most valuable in the industry. Please be thinking about that as we go through, thinking about what it is you would want to see. And we're looking at doing probably 1,000 Gen Z, and then we'll probably have comparison groups with older generations, just so that we have that contrast and comparison. So that'll be kind of the design at a high level, but we absolutely are going to want your suggestions and others in terms of what the focus should be. Should it be a broad-based, really high level? How do they see financial goals in investing, and what technologies do they use, and what products do they use? Or should it be more focused on some specific areas? So keep that in mind as we go through and we talk about what we heard in these focus groups that we did. So we're going to start out with as we always do in focus group, we started out more general with attitudes, Gen Z attitudes towards finances, their own financial life. We asked them about their goals. I will say I found it fascinating, right? So I have done a million focus groups and in-depth interviews with all sorts of consumers across generations, right? A lot with pre-retirees and retirees, plenty with Gen X, lots with millennials. So I've talked to a lot of people about these topics before. And I was really interested and perhaps a little surprised that these Gen Z folks are really, I think, more mature than I expected in terms of how they talk about and think about finances. Their eyes are open. So we talk here, they're cautiously optimistic. So they are, they think they're going to be able to do what they want to do, but they're very aware. They're not like pie in the sky. They're very aware of some of the challenges facing them, some of the barriers. We'll talk about it here, debt, things like student debt, their credit rating, and the types of things that might impact their credit rating, saving and investing. They were they were much more savvy and sophisticated than I expected. And maybe that, other generations were at this age. So what were some of their goals? Short term, moving out, getting their own place. So one of the themes we heard was really separation from parents, right? So a lot of these folks are still being supported in some way by their parents. Either they still live at home, they're still financially supported, not all of them, but a good amount of them given their age. I think even if we went up to millennials, we'd probably see some of that. But so that's something they talk about a lot, is I want to be independent from my parents. You hear the word independent quite a bit. Starting a business, like at the beginning of their career, like that's what they want to do right out of the gate, right after college, or as they start working, and education, right? Finishing college, graduate school, those are things that come up as well. But they were very entrepreneurial. Even some of them wanted, traditionally start a small business. One does renovations, one talked about opening a salon. Even the ones that didn't specifically want to start a business were still entrepreneurial. When they talk about multiple income streams, they talk about buying a duplex so that they can rent one side and pay their mortgage. They really, again, that comes back to sort of, they have a pretty sophisticated view. Long-term goals, so more than 10 years out, being debt-free, paying off student debt, buying a house, and then, different personal goals, traveling, having children, getting married. One says, I hope in 10 years I'll be able to do something fun with my money instead of what I'm doing now, which is just, saving and getting by. Some of their concerns, some of the barriers they see or the worries they have when it comes to their financial present and future, juggling a lot of priorities, right? So they have these goals, but then there's the reality of, they have to get through today, they have to have a place to live, they have to finish college. So juggling all of those things, some of them, a part-time job or a gig type of job to help with that. They've got the debt that they're thinking about and worrying about, keeping their credit score up. So a lot of different things that they're sort of thinking about at once. Paying off the debt and not getting into more debt, not getting into credit card debt on top of student debt is a focus. Unexpected expenses, several of them volunteer readily that, they have an emergency fund. One mentioned their car was totaled, another mentioned health expenses, even at this young age. She had accrued already some medical expenses. So they're aware of that. Again, it all kind of feeds into this sort of, their eyes are wide open and they know what they're facing. And many of them mention world uncertainty, circumstances, chaos, things that are outside their control. Some specifically mention inflation, where we are now. A lot of people mention Russia and the Ukraine. I mean, there's just big picture. They feel the world is very unpredictable and the impact that will have on their finances is unpredictable. And that all feeds into their concerns. Money and finances are high on their priority list, right? So even those that are at home and might be getting some financial support from their parents, it's still up there for them. They're thinking into the future. And so that is something that's top of mind for them. And as we talked about in the previous slide, they're often juggling maybe conflicting needs and desires, right? So their needs, the things that they know that they have to do, education, and sometimes without an income. So that means, debt, student debt, employment, the increasing cost of living, so that they're focused on sort of what they need to do and their responsibilities. And then the things they want to do, right? So hobbies, interests, how they spend their money now. Many of them, we really heard this loud and clear, they're very frugal. They're way more frugal than I would have expected. And then retirement, which, I might put in the financial needs and responsibilities, but to them, it's seen as it's so far in the future that it's like something I should be doing, it's something I want to be doing, but it's not an immediate need. So that usually it does take a backseat. They know they should start early. They have that in their head, but it's just really hard to juggle that with what they're trying to do to get by. So just kind of a quote here that encapsulates what I was just talking about. It's a juggling act. Part of it is saving for the future, saving for retirement. At the same time, I want to continue my education to increase my income. Same time, I'm trying to save for a house. So it's balancing those things and trying to do them all at the same time, which can be difficult. I have to decide whether I can do all these things at the same time. For now, I don't think I can put much money into a retirement account just because I have other upcoming expenses that are more important in the long run for me. I have to sacrifice some of those for the others. So that was a general consensus, right? They can't, and retirement falls to the bottom of the list because it's so far on the horizon for them. So most of them were not saving for their retirement yet, right? They weren't in their career yet, and they just, that was something for the future. Some of their strategies, and again, I was really impressed with their savviness and sort of diligence when it comes to managing their finances. Again, this is qual, so this is a small sample size and maybe not reflective of the wider population. We'll find out. Budgeting, many of them have like they use Mint, they use NerdWallet, maybe they use Excel, and they keep track of all of their expenses, all of their income, what's disposable, what can go to savings, what I need to spend. Not everybody, some of them, but even the ones that don't more formally budget with a tool, feel like they're keeping track of it pretty well in their head. So, and they really like, we're going to talk about technology. They like Mint, they like NerdWallet. It makes it easy for them. It's very automated. Saving. So they were very frugal. Several of them mentioned that they don't spend. They don't go out to dinner. They're not, it's not like the stereotypical avocado toast of the millennials. They seem like they have a much more frugal mindset. They're focused on what they want to do. They're focused on minimizing their debt. And I was surprised how often I heard, well, I have to check my credit score because I got to build my credit score because at some point I'm going to want to get a house and then I'm going to have to get a good credit. I mean, when I was this age, I did not think about my credit score at all. I don't know that I even had a sense of what that was. So that was a little bit surprising to me. And investing, this is, they say that this is a secondary goal, and this is investing in general, not for retirement specifically. They're more focused on getting to the point where then they can invest, right? Like they feel like they're kind of pre-investing, but some of them do. Some of them do mention that they have an account, they have, we'll talk about this in a bit, but they're using an investment account, an app, but it's not their primary focus. And interestingly, like a number of them were like, no, I don't invest. And then later they talked about having crypto. So just thought that was interesting that they don't, and we'll talk about crypto specifically, but they don't see crypto as an investment. They kind of think of that separately. So the impact, we talked to them about sort of, kind of healthy behaviors when it comes to finances and less healthy behaviors and what impact that has. So they feel like if, they're doing those things, if they're budgeting, if they're saving, if they're thinking about these things, then they're in control of their finances. That was the language that we heard. And that they're moving their lives in the positive direction. They're moving towards their goals. On the other side, they have this fear of not having their finances under control. So they feel like if someone doesn't do these things, they're either unable or they're unwilling, they're going to lose control, and that's going to sort of spiral negative consequences like poor credit scores. Then you're not going to be able to buy a house. You're going to get into debt and have impact from that. So I think a lot of the talk about, because this came up, they mentioned this, that, they for years heard about loans, student debt, right? It's in the news. They hear about it all the time, whether it's their parents or their aunts and uncles, or, they just have heard of this constantly. And so it has built in them a fear of debt. I mean, you hear it very clearly that is very top of mind for them. A little bit just kind of on uncertainty, because we talked about how that was something, that came up in the world, but also financially. So for a while I was thinking about investing through an app like that, but just given the state of the world right now, I'd rather put my money into a savings account where I know I'll get at least a little bit of interest versus potentially losing a lot of money. Everything going on with Russia and Ukraine, the pandemic, everything is just so uncertain right now. So, we heard different variations of that. Inflation was part of that. What's going on in the world. One gentleman said, I know I'm supposed to start early, but then I put money in an investment account and it lost 10%, like immediately the market crashed. So they're nervous about the volatility. They're nervous about the world at large and how that has an impact on inflation, on volatility, and all of those things. But it's definitely made them, cautious about investing and how they invest. And we'll hear some of that when we talk about crypto and their attitudes there. So talking about kind of the technology, the products they use and how they use them, and the technology piece. As all of you know, I mean, Gen Zers or Zoomers, some of the Zoomers is another term for them, are digital natives, right? Even more so than millennials. Sort of technology is part of who they are in everything they do, and it always has been, right? Everything, how they think of the world, how they interact with the world, has always been technology driven. So it's very ingrained in them. And so as they enter a part of their life where finances start to be something they're dealing with, it just continues to that, right? I've always done everything with technology, whether it's my education, right? My iPad at school and the apps I use to manage my class schedules, or the, gaming I do and ways I interact socially, to now, okay, now I have money and I have to manage money. It's going to be the same thing. right? So it's just part of it. It's not like a fringe convenient thing. It's what they're, kind of core of who they are. They just, it's just the way most of us grew up. I'd rather type out something in my notes app than write it down on a piece of paper, things like that. I'll always use banking apps instead of going to the bank or even opening the website on a computer. To them, the website isn't even tech, right? It's all on my phone. Everything's on my phone. That's how I interact with the world. So I think when we talk about FinTech 2.0 and how, obviously websites were a big part of financial technology and being able to access your bank through a website and your credit card companies, to them, that's not even really technology. It has to go a step further. It has to be app-based. And they're not going to walk into it. They don't want to talk to someone. We heard that a lot. Like the idea of like walking into a bank was like completely foreign to them. So I think, they're not at the place where they're using financial professionals, but I do think you could perhaps carry that forward into how they might want to interact with financial professionals in the future. That even that's going to have to be technology and digital driven. So what are they using now? What are their sort of, and they had to have some kind of financial product to be part of these focus groups. So they had to have a credit card or a bank account or Venmo. That was pretty much everyone we talked to did. So that wasn't a huge screen. And then within that, there was a variation in who we talked to. Some did more and invested and had a lot more things, and some were kind of doing more the minimum. So what are they doing? We mentioned already saving and budgeting apps, right? So that's something they said right out of the gate. Like that was one of the first things they say when we said, what technology are you using? They like those and find them really helpful. They have automated reminders, and they like NerdWallet checks your credit score for you so that you can keep that in the same place. Investing apps. So they do mention sort of kind of newer ones that are developed, for targeting this market, like Robinhood or Acorn. And they talk about some of the advantages of the newer apps like fractional shares and how that it makes investing more accessible for them as people who don't have as much disposable income to invest. They also talk about apps from more traditional financial services companies like Vanguard and Fidelity were mentioned most often. And that line is sort of blurring, right? As more traditional financial services companies get into this space and even buy some of the newer companies or emerging fintech companies, there's a lot of overlap here. And so those lines are definitely blurring. And then, peer-to-peer payment apps is something that they all have to a person. And we're talking about this in a second, but this leads to them, like literally none of them have $1 in there. They do not carry cash like at all. That's foreign to them. And even credit cards are not, that's old school to them. It's all about payment apps. Less frequently, but mentioned by a few are crypto apps. So some of them do have crypto and use Coinbase and other crypto tools. None of them had used kind of peer-to-peer lending. That didn't come up. I think when we do the quant, we'll hope to be exposed to some of that. And, they talk about doing this because it's convenient. Again, for them, it's hard to separate. Like, why do you, well, yes, it's convenient, but it's also just what I'm used to. It makes all of the technology they use, it makes elements of their lives easier, more convenient. When they have to pay a friend or their mom or dad wants to give them money, it's a lot easier to do. It feels, it feels like how you're supposed to do things to them. So what do they look for in digital tools or apps? And I will say, we heard this, and if you've seen some external research, this is definitely out there. They're not brand loyal. Like they're going to move to the one that works the best for them. And the one, they're going to find one. And if one doesn't work for one of these reasons I'm going to show you, then they'll move to another one. Not a lot of brand loyalty among these types of products and solutions. So for strong functionality, it has to do what I need it to do. It has to be easy. And if not, I'm going to move to the next one. There's going to be a new one out there. There's going to be a disruptor that's doing it differently and doing it better. And I'm going to move to that one. So that's key, right? It has to do what they want to do. And I think this is something maybe in the quant that we'd want to dig deeper. Like, what is that functionality? What are the specific things that you needed to do? Low and no fees. They don't want to pay money for it. They have limited financial resources. As I mentioned, they're very frugal. They will find a cheaper option if needed. There will be someone who will do it for free, and maybe there'll be some ads or something I have to watch, but I'll be able to do it. And this came up with the payment to payment apps that, or person to person payment apps that some of them they see fees and some they don't. And so they don't really understand then why there would be fees. A couple of them were a little bit more savvy and knew why and how to avoid fees and that kind of thing that came up. But they're not looking to pay fees to use these tools. And then what's being used in their circle, right? That's key to them. So these other things are important, but in the second one I mentioned fees, and some of them mentioned Venmo has more fees than say Zelle, but I still use Venmo because everybody else uses Venmo. Everybody has Venmo, so I have to use Venmo. So because of how some of these tools work, they have to use ones that are in common usage or they'll lose their value. And that's true more for the person-to-person payment apps than some of the other things. But again, I mean, they are also very influenced by their peers and what they hear. So if everyone, some mentioned Robinhood sort of losing favor, right? Everyone had used Robinhood, everyone they knew used Robinhood, and then they got kind of turned off and now they're looking elsewhere. So they do kind of listen to each other as what's popular at the time or in the moment. So a little bit more on the peer-to-peer payment apps. They all use them, every single one of them. All their friends do. This is how they handle money generally. It's how they move money. It's how they pay for services. Some pay rent using a payment app, which surprised me, but some of them do that. They don't really have concerns except for the fees that I talked about. That's something that comes up. But they trust them. They're not worried about the security of them. And as I mentioned, a surprising number of them don't touch cash. And especially since the pandemic started, like they really can do it all this way, and now they're going to do it all this way. I do think the pandemic, and I mentioned in the beginning, accelerated some of these things because it became more mainstream, right? Where I use Venmo more because of that. Everyone I know does. So I think whereas before maybe they couldn't get money from their parent using Venmo, now they can, because even their parents have Venmo since the pandemic. So it has become more mainstream. But yeah, they don't carry cash. In terms of investing apps, a little bit more there. They all have awareness. They all have friends. Robinhood comes up the most often. They feel like that these apps make investing more accessible for those who do have a little bit of money to play with. And again, they have the ability to maybe invest, buy a fractional share or just dip their toe a little bit. But they do bring up concerns here. And really their biggest concern is that it's dangerous for people who don't understand what they're doing. And this comes up, we'll talk about crypto in a second, this comes up with crypto as well. There's a gambling aspect to it. And if you don't understand, or you just hear something on the news, or you hear your friend say something and you put money in, you could lose all that money. And so they just think that some inexperienced investors are less likely to know what they're doing. And so they invest poorly and they lose money. Even they themselves, some of them use it. Some of them are like, I need to learn more about it before I do it. I need to understand. And they bring up specifically, spontaneously, several of them mention the whole GameStop meme stock phenomenon as an example of kind of both good and bad, right? Some of them had friends who that was a good thing and they made a lot of money, and some of them got in late and then they lost a lot of money. But it really brings sort of that idea of volatility and unpredictability and lack of knowledge and just sort of following the trends. And that hurt Robinhood's brand to some extent. Crypto awareness is high. Engagement with our participants was fairly low. We had some that had a little bit, a few of them that were into it. Some of them are a little bit FOMO. They fear of missing out. All of them had dozens of friends who were in crypto. So it's certainly in the space. They all know lots of people who are doing it. And so some of them are jealous of that because they think they might be missing out on an opportunity. Others of them still think it's too risky and just aren't willing to do that. And some of our participants, are in crypto. They think it's like gambling. They have a lot of concerns about the volatility. And this was before the big crypto crash, right? We did these groups before things that have happened in the last couple months and before everything kind of fell off a cliff with crypto. Several mentioned that there's no FDIC, right? All your crypto can be gone. The volatility, the NFTs, and the potential to have no worth, but for crypto as well, the potential for the bubble to burst, which maybe it did soon after these discussions. And they struggle on the flip side to talk about what they see as the big positives. Some of them mention accessibility, but even that's pretty vague. They don't, open access to things where people traditionally didn't have opportunities to invest, but that's a very high level, and they don't really have detail on that. They also a couple mentioned the negative environmental impact of crypto because of mining. So, it's mixed on whether some think it will get more mainstream and more regulated and become just another part of investing, and some think that will not happen, that it will, and I would be curious to kind of see where people would think now. Another kind of risk is that a lot of them said, even the couple that were in it said no one really understands how it works. Kind of like we were talking about with investing in general, this understanding of blockchain is really vague and people don't really understand the underlying mechanisms, which makes it more risky. So in general, our Gen Zers, our Zoomers felt that their financial life is different. They are different than older generations. They feel that way. They all feel that they take a sort of self-described new school approach to finances, and they don't belong in the world of even bank accounts and credit cards, much less cash. They just think it's different for them. It's hard. They feel like it's harder to make one's own way, to be successful. They've got to work harder, try harder, be more knowledgeable about financial aspects, be more efficient in how they do things, and all of the digital tools help them do that. And they're different because all aspects of their lives are fully integrated in a digital space. And I should say I can't say these kids, but these individuals that we spoke to, they all did have a bank account, but they don't want to. I think in the future, I think they would look for other options of where to put their money that would still be liquid and accessible, but isn't a traditional bank account. So I think I could see on the horizon opportunities in that space. And of course, they don't carry cash, as I mentioned. So, my friends are more new school, people around my age. However, I feel like people realize they don't live in the same time period 50 years ago. They can't treat life the same way. It's a little harder to survive. They don't try to be financially some people don't try at all. They don't try to be financially responsible because they think they're not going to ever retire. So I mentioned in the beginning, they were sort of cautiously optimistic, and these folks are about themselves. They feel like they are going to try and they're going to do what it takes, but they do talk about their generation feeling sort of hopeless in some ways about, that they'll never retire, that they'll have to work forever, that's just the world they live in now. So, that's overarching. Again, not, these all feel like, but not me, I'm gonna do it. But they're more pessimistic about their generation at large. So some of the things, just kind of wrapping up what we heard. A lot of the goals, when it came to the goals and challenges, it was similar to when we talked to millennials. This idea of worry about there's always even boomer, worry about market volatility and economic uncertainty makes them worry. But I think in one way they're different in the sense, and they're trying to get out of debt and they're trying to buy a house, and all of those things are similar to what we've heard from millennials and other generations. But these folks do seem at a younger age to be more savvy, to be more aware of what they might need to do to succeed. They don't want to give up. They're going to kind of use all the tools at their disposal to be successful. They are intuitively comfortable using apps. They expect to be able to leverage technology in every aspect. And their standard of technology and what is acceptable, I think, is different, right? It's not a website. It's more than that. It's got to be an app. It's got to be intuitive. It's got to be super easy and integrated. On the flip side, they are more hesitant about crypto than I think the stereotype that all Gen Zers are into crypto, with varying degrees of acceptance and comfort. Many are not, although they do know peers who are, so it'll be interesting in quantitative to kind of see how broad it is. And so, for crypto companies, I think it's important. And I mentioned that we work with a crypto company, and I think, they're learning that there are some barriers to entry. It's not like every Gen Zer wants to buy crypto. And again, this is all in the context of a lot has changed in the crypto space just in the months since we had these discussions. I think, and I'm sure they all, you all are, if you're from financial services companies, you already are, but certainly Gen Z user experience feedback is going to become more and more important as digital tools are developed, as FinTech is developed. I don't think Gen Zers make up, from the research space, they don't usually make up a large part of the sample. And I think that's something that financial services companies and FinTech companies need to be thinking about, because I do think as they enter the market, their expectations are going to be different. And so their feedback needs to be taken into account as the most digitally native generation. They're not brand loyal, so they're not going to have patience. If it doesn't work, they're going to move on. So I mentioned in the beginning that we are looking to do a phase 2 for this. We're going to do a large-scale quantitative survey, I think with 1,000 Gen Z consumers, as well as some comparison groups of millennials and Gen X. I'm not sure if we're going to include boomers or not. That's an outstanding question. And we are looking for feedback on what kinds of things, what kinds of topics, what kinds of questions would be most valuable, what should be covered in the quant survey, what would have value, where is their data lacking in this space, should it be a broader brush kind of financial topic survey, or should it focus in a couple specific areas, or a mix of the two? Should it be broad Gen Z target, like Gen Pop, Gen Z, or should there be like they have to have X products, or they have to be investors, or they have to be users of specific products to qualify? And then, as I mentioned, like who, do we need boomers as well, or can we go kind of millennials, Gen Xers? Is there enough out there with boomers that we don't really need to include them? So would absolutely love your thoughts. Would love your thoughts in the chat. If you have a couple of seconds to kind of put some ideas that you would love to see me, come back to in a couple months with numbers, with data from Gen Z. What would that look like? What would be most valuable to you? So please, go ahead and put that in chat, as well as any questions you have on anything that we talked about from the focus groups. You also see my email on the screen if you want to kind of think about it or source with some of your colleagues things that would be valuable to them. Feel free to follow up with an email with as much detail as possible. Obviously we're not promising we're going to include everything everybody asks for, but we really do want to deliver something that's going to have value, and going to help companies make decisions, help target this audience, help serve this audience. So please, I don't see anything in the chat yet, although I don't know if I can, or it goes through someone else before I can see it, but please do. And again, any questions as well.